Okay, let's go to, where should we go?
Let's go to Adelaide.
Okay, Adelaide, is it? Fraser McLeod joining us from Shaw and Partners. Fraser, welcome to the program. So the day, the week, what do you make of it, how things are shaping up?
Hi there. Oh, well, thanks for picking me first. I don't know who was second, where else you were going to go. Well, reporting season is over. And, are we back to normal? Well, look, probably not. I don't think there's really much chance of that. So my focus is really just to focus on, well, what are we going to hold now Australia is in recession, and what are we going to drop? So I think that should be in the back of everyone's mind. In the back of my mind is the 7% fall in GDP. Back of my mind is 7.5% unemployment domestically here in Australia. And back of my mind is this Victorian lockdown that just keeps grinding on forever. So front of my mind, of course, is that this market is still trading on 20 times forward earnings, and that should be giving us a bit of a cautious stance before we even start looking at any one individual stock. So still pretty cautious. Market's still quite expensive. Australia is definitely in recession now, first time in 3 decades, and pick your stocks appropriately.
Financials trading at about 30 times forward earnings. That is unprecedented levels. So definitely know the air up there for the time being. Fraser, with this recession portfolio, let's go nominate a stock that you would go and sell at these levels. Now, we mentioned about going to Adelaide. A lot of people are planning to go there via air. You don't like Sydney airports at the moment, though.
Yeah, look at it. So from my window on the 23rd floor and the biggest building in Adelaide, I can see directly across that to Adelaide Airport, and there's not a lot of planes that fly by these days. And the challenge with Sydney, of course, it is is it a bad business? Of course, it's not. It's actually the best infrastructure asset in Australia. But the reason that you would have bought the best infrastructure asset in Australia is because you really wanted the security of that dividend income or that distribution income that should come from Sydney, and currently, you just don't have that. So it's probably not within the income objective of many clients who may have looked at it before. And it's not really an infrastructure stock anymore. It's more of a vaccine stock, and because of that, it's really just a bet on where vaccines could go next. So if we don't get a vaccine, the stock is just going to remain in hibernation, and that's no reason to be holding on to it. So I would be easing out of Sydney. I think it's better places you can use your money.
Okay. We don't want to lose money. We want to make money, don't we, Fraser? We want our audience to make money as well. What is a company that you think has a good head for money and will help investors as well achieve their goals?
Sure. Look, so 20 times forward, you really have to start thinking. You look for ways to hedge out your portfolio, and something like a Regal investment fund, which they did go down during the initial stages of the pandemic, but they've come back pretty hard. Regal investment fund RF1 are now trading on an all-time high. The Scottish value investor inside me loves a discount, and they are still trading at a 10% discount to the net tangible asset backing of the underlying portfolio. Now, Regal, if you go by pedigree, Regal's been around for 15 years, run by Phil King. They've won Hedge Fund of the Year for 4 separate years, and they provide returns that are historically, the returns have always been non-correlated to the equity market, and currently now that's exactly what investors should be looking at. So they blend their 5 best strategies. You get that 5-in-1 strategy just by holding that one security position of RF1, and it's important because at a time when the market has really just been fueled on momentum and the direction of most things going up, or certainly a lot of tech names going up, then you really want to be quite conscious of hedging out your portfolio. So RF1, you're banking on the fact that their stock picking is going to be much more important, and the historic record of them stock picking very well is going to be much more important than momentum of this market, because if momentum turns, everyone that's long only is going to be hurt pretty quick.
Team there at Shaw's is pretty positive when it comes to gold miners. We're seeing a bit of a pullback at the moment.
Yeah.
You're still a happy holder of these gold miners at these levels?
Sure. Look, gold. My gym instructor keeps telling me to keep working on my core. So if we're going to keep working on core portfolio positions, gold is certainly one of them. Might be a little bit more work that needs to be done, but in terms of the share price performance of some of these gold plays, but something like an Evolution Evolution and Northern Star, they battle it out for who can be the number 2 by market cap gold stock on our market. Evolution's worth about 9.5 billion, and Northern Star's worth about 10 billion at the moment. Their share prices are substantially weaker than when they were a few weeks ago, but we firmly believe that the golds are going to be able to help equity investors hedge the risks that are yet to come. And Evolution had some slightly disappointing forward guidance in terms of production, probably a good chance to be able to add a few more. So certainly holding some Evolution here. We target them at $6.50, and that's really just more of a stepping stone for the gold price going higher and for the Evolution share price going higher.
Just talk to us just briefly about how your clients are feeling right now. Now that we are past reporting season, we still have quite a few headwinds, whether it's geopolitical, mentioned the US election, the kind of conversations that you're having right now.
I think your previous presenter was probably right in that conversations that are going to happen now are less about outlook statements, less about earnings. We know as much as probably we're going to know, and it's really all going to be in the second half of this year. It's now going to be looking forward to the circus that is going to be the US election, and how that one's going to play out. Which president potentially is going to give you the more political risk to your underlying portfolio. So it's all about politics from now until the end of the year. Most probably expect some real shenanigans there, and so that's where our crystal balls will be trying to make the best and clearest outcome. So moving from the earnings risk to political risk, I think.
About you over there in Adelaide, but it's been a gorgeous day here in Sydney. Hopefully one day soon we can go and enjoy a beer sometime together. So obviously I know it's been a long time since Sydney and Adelaideans will be able to go and catch up.
You're just pining for Adelaide.
I am pining for Adelaide. We finished talking to Com Nikolakis yesterday from Statewide.
No COVID in Adelaide. No.
We're safe.